Hello and welcome everybody on today's presentation live from New York City, which is an amazing city. This is Claudia Eifert here speaking on today's presentation, today's webinar. Welcome everybody from all around the world. I have the founder of and CEO of Utopianglobal with me, Bill Rowell. Hi Bill, how are you?
Great, Claudia, great to be on the call.
And I have the CEO of Storh with me on the call as well, Ryan Messer. How are you?
I'm great. How are you? Good to see you.
Always good, always good. Well, we have some great, of course, news for you today. But of course, we do have a lot of new people on the call. So we want to, first of all, run very quick about Utopianglobal and what Utopianglobal is. And obviously how you can benefit from Utopianglobal before we let those two gentlemen speak about really what the mission, the purpose, and how you can make money with Utopianglobal is. So let's get started. And as you see here, the power of investment in a better future. Don't we want all to have a better future? Sometimes when we follow the news, and I know a lot of people follow the news, it is not so easy to believe. Well, we certainly live in a stark financial and environmental reality. We most certainly have an imbalanced global financial system. We see the poor getting poorer, the rich getting richer, and somehow the middle class, which we all so much treasured, is sort of going away. And this is really a worldwide phenomenon. We see this crippling wealth concentration, a declining global currency purchasing power, meaning we need more, dollars, euros, pounds to buy the same goods and services as we did some years back. We certainly have a rising government debt. Ryan, you have to help me there. I mean, I know sort of the numbers, but it is pretty staggering here in the US, most definitely in a lot of places as well, all around the world. And certainly we have a global plastic crisis, meaning all over the world, when you go and not just look at the ocean, you look at the streets, you look at everywhere, it's plastic. We see plastic. You have, of course, Australia was very recently in the news. They wanted to, or they have, it's done so in the past, of course, sent their plastic to China. Now China doesn't want to have any more their plastic. So it's a huge crisis there. And we do have a global resource consumption crisis, meaning we need more global resources. Why? Well, because the world population is growing, and it's growing very, very fast. And of course, those needs to be covered, and of course have to do with energy. So what if you could actually countercrim financial realities and address environmental damage and the energy crisis while also boosting your income? And that is what we do at Utopianglobal. We have real assets, and we certainly provide you real income streams and therefore real lifestyle. So we're really a better way to counter today's financial pressures and environment crisis, grow your income, grow your assets, and face the future with confidence. That's what we all so much want, don't we? So it's basically a unique system where you can earn through investment in income producing energy assets via Storh, and Ryan Messer is going to talk more about that, where you can safeguard your wealth by saving in precious metals, which we have done so since 2008. Bill is going to touch on that in a second. And where you can get rewarded by marketing our products and services and therefore boosting your income, and certainly benefit from proven wealth strategies and business ownership with legal tax benefits. Owning a business certainly can give you legal tax benefits. And with that, I want to introduce the founder and CEO of Utopianglobal, Bill Rowell. As you see, a very, very successful entrepreneur with over 30 years of experience. Hi, Bill. Welcome to the call.
Hi, Claudia. Great to be here. Hi, Ryan. Great to see you again. I enjoyed spending some time with you in the States, and of course meeting the marketing team and getting updates on the assets in Houston. But it's great to be here, of course, being able to address our members around the world. We're living in a changing world, no question about that. In fact, yesterday I spent most of the day with the with a person that was in charge of equities for Goldman Sachs for 27 years. And what he had to say, I learned a lot from him. I've known him since the 1980s, so it was really precious to spend most of the day with him yesterday. And it's a time for real assets. It's a time for diversified income. And this is really what we bring to each of our members around the world. So thank you for joining us from wherever you are. I've got people from all different parts of the world. I have over 30 years history in business. My first business I purchased in 1986. In fact, it was a hotel business. I owned 4 hotels over 20 years. And in the 1990s, I was introduced to the world of multi-level marketing, affiliate marketing. And I must say, I fell in love with the concept. I mean, compounding wealth is a necessity. When you have inflation, when money buys you less over time, this paper stuff buys you less over time, to get ahead of the game, you need to take advantages, and compounding is certainly a way to do that. And really, this is what Robert Kiyosaki, many of you would be familiar with Robert and his work for the Rich Dad, Poor Dad series, the cash flow quadrants and all of his work. I had the pleasure of meeting Robert in 1998 in Melbourne, Australia, when he launched his book, Rich Dad, Poor Dad. It cost $50 just to go and see him to talk about his book and the story. There was 1,200 people in the room, but it was clear. If you're trading time for money, if you're trading time for money, and now here I've got Australian dollars, kangaroo pictures on it, and emus. I've got shillings from Kenya. I've got naira from Nigeria. I've got US dollars. I've got Swiss francs. In fact, it's all paper, and some of it's polymer actually, but primarily it's backed by nothing, just the belief that it has value. And if you're trading your time for money, whether it's let's take one of these notes. Let's take $10 or $20 a note, $20 note. You're trading $10 an hour. Primarily in your lifetime, you're going to work 40 or 50 hours a week. Over 40 years, that's 100,000 hours of your life you're going to trade for a paper currency. You provide service, you render service, you're getting paid in the currency. Let's say it's $10, which is probably around the minimum payment here in the US, I would expect. $10 an hour, you're trading your time for rendering service. 40 to 50 hours a week, over 40 years, you're trading 100,000 hours of your life. 100,000 hours of your life, you're rendering service. In reward for that, you're getting paid in currency, paper currency. Something that's losing value, probably 50% every 10 years. Now, 100,000 hours multiplied by, if it was $10 an hour, would be $1 million. Now, $1 million sounds great, doesn't it? But over 40 years, before you paid the taxes, before you paid for your mortgage, your rentals, your cost of living, you're left with Zippo. Now, even at $20 an hour, it's $2 million over 20 years. Take out your taxes. In some places, it's going to be up to 50%, like in Europe and other parts of the world. Take out your mortgage, take out the cost of living, you're left with Zippo. And statistically, it doesn't matter where you are, we know that primarily only 4 or 5% of people work their entire life, trade 100,000 hours of their life, and retire, let's say, comfortably or financially free. And this is the whole point, what Robert Kiyosaki brought home. You need to be able to move away. If you're an employee, if you're a nurse, if you're a teacher and you love what you do, we'll keep doing that. But by itself, it's not enough. And the ecosystem that we provide here, what Robert Kiyosaki speaks about, is you need to have a bit of both. If you love being a nurse, keep doing it. If you love being a taxi driver, keep doing it. But on the side, you need to have multiple streams of income. And this is primarily what we do. And through the Utopian platform, we enable you to move over to the right side of the quadrant, to become a business owner, to own real assets, to be able to generate another source of income. And this is absolutely critical if you want to be able to be financially free. But if you don't have compounding working in your favor and you have debt, well, it's working against you. It's imprisoning you. So this is one way that you can actually have compounding. Einstein called it the 8th wonder of the world. It's something that you can have working for you that's going to get you ahead of the game, ahead of the curve. And you need to be able to do this in a world which is burdened with so much debt. You need to have this working in your favor, and we do that through Utopianglobal. You need to think outside the bank in one sense, okay? Most people don't know or are aware that the money you put in your bank is no longer yours. You become a creditor to the bank. It's not your money anymore. You are a creditor to the bank. In fact, this is derived from debt. So we won't go into that right now. There's videos that we have available for people to watch to educate them on that. But building wealth, okay, we need to have this stuff. We're going to Kenya soon, and in the US, so we're going to need US dollars when we're in the US, and we're going to need Kenyan shillings when we're in Kenya. We're going to need South African rand when we're in South Africa. In Uganda, I think there's shillings as well. We're going to need those local currencies when we're there, and wherever you are, you need to be liquid in your country to buy, to buy goods and services, your food, pay your bills, those types of things. But to build real wealth, it's not the way to build real wealth. You need real assets, whether it be real estate, whether it be natural resources, whether it be some gold. Now let's talk about gold. I've got some here. This is 1 ounce of pure gold. Look at that beautiful thing. That could be in the ocean for 1,000 years. You bring it out, it's the only element that shines like that. And it's wealth preservation. You go back to Roman times, and this was introduced to me by Philip Judge back in 2003 after I sold my last hotel. And he gave me a metaphor because I was not familiar with gold. In fact, in our house, it was bad manners to speak about money, which I thought was crazy because I saw my father and everyone was working very hard to get money on the table to pay the rent, to buy food. It was something that we're not really allowed to speak about, which is quite an oxymoron in one sense. But 1 ounce of gold going back to, of course, Roman times would actually clothe you, would buy a toga and a pair of leather sandals. Go back to the 1920s, go back 100 years, 1 ounce of gold would also clothe you. It would buy you a toga, it would buy you a three-piece suit, shirt and tie and leather shoes, 1 ounce of gold. Or
Bill, I cannot hear you anymore. Bill, I cannot hear you anymore at all.
okay, when did I stop, Claudia?
Yeah, the last, basically you didn't hear anymore the last 1 minute.
Okay, did you hear me speaking about 1 ounce of gold? It must have dropped out.
Yes, you did drop out. You can move on.
Okay, well, 1 ounce of gold in the 1920s was priced at $20 US. Okay, so you could buy 1 ounce of gold for $20 US, or you could actually buy a three-piece suit, shirt and tie for the equivalent to 1 ounce of gold or $20 US. Now, my question is, wherever you are in the world right now, it doesn't matter where you are, what can you do at $20 today? Would it buy you a three-piece suit, shirt and tie and leather shoes? Primarily not, but the same ounce of gold exchanged to any particular currency, any of this paper stuff or plastic stuff, is still going to buy you a very fine suit, three-piece shirt and tie and leather shoes. This is a store of value. It's priced the same globally. It's a unit of value, but paper value is not. And that's really the point of being able to diversify into gold. In fact, it's probably one of the smallest assets that you actually own in your portfolio. In fact, Philip Judge spoke about back then in 2003, to me, probably 3 to 5%. Many of the experts say today you probably should hold paper wealth, hold 10% of that in physical metals today. And that's really important. And with you, of course, with the Utopian global system, it's highly liquid. You can own gold and silver today. And of course, it's an insurance policy. We don't see gold and silver as an investment. But long term, I think it's going to do very well against the various exchange rates as we move forward with the global situation. But if you want to liquidate with the Utopian Global, you just log into your back office. It's very simple. You say you want to be able to sell X number of ounces or grams, and next day it goes to the London market pricing. And then whatever the sell rate was at that particular time is credited to your actually e-wallet, and then you can actually get it paid out to your account, into your nominated account. So it's a highly liquid platform that we actually have. We also have on the next slide, Claudia, Ryan Messer. Now, this is really important because we're now moving into real assets. And this is what Philip Judge also introduced me to back in 2003. In fact, he introduced me to Ryan Messer. Philip Judge was the CEO of an energy fund. And I liked what he had to say. I wanted to own real assets. I sold my last hotel. I wanted to take some of those proceeds of that hotel and I wanted to have that money working for us. I knew that keeping this in the bank was not good. It was going backwards. I had to have it working. So gold and silver was wealth preservation, but putting it into energy fund that was returning high yields at that particular time, it seemed logical to me. I was earning a passive income. I was ahead of the inflation curve. Okay, and this is what we have today with Storh, with Ryan Messer. In fact, before I invested with the energy fund, I wanted to meet the team. So I hopped on a plane, I flew to Baton Rouge, Louisiana, and I met Ryan Messer back in 2004. What's that, 15 years ago? So we've known each other a long time. We did very well with that investment, and that brings us back to 2019, still doing business together, and Ryan is the head and CEO of Storh. Ryan's been managing assets for the last, in the natural resource sector for the last 20 years. And I must say, it's an absolute pleasure working with him, a man of integrity, man of vision, passionate about his work. And so maybe I'll hand it over to you and give us some more about Storh, Ryan.
Bill, thank you very much. I love the background that you give everybody on owning assets, because as you point out, that's been my life for 20 years. I traded my time before I got into the energy sector in the technology space, and that's not a bad way to go. Certainly, I was very passionate about it. I love the technology space and as a consultant and in the sales arena. But you know what I love about what we do now is we buy and manage assets that produce around the clock. When we're sleeping, when we're eating, when we're off on vacation, of course you have to have people to manage those assets, and of course that costs money. But these assets produce 24/7. The cash register is just clinking along all day, and that's why we love what we do. And so we find assets, of course, that are in a very niche sort of play, right? Because one of the things we don't like to do is go out and compete against the billions of dollars or tens of billions of dollars that are being pumped into the energy and minerals sector and all these other places. But where we've done really well is to find little niches in the market, and we exploit those. And that has really been, along with the last 20 years and seeing what's happened in our industry and seeing what's happened in the market and just the sentiment around the world, around the environment. We understand that everyone cares about, you know, leaving the world a better place, but what are the solutions? What are people actually out there doing to do that? And what the investments that everyone else sees or that you see out in the marketplace, are they focused on leaving the world a better place? In a lot of cases, they're not. And so that's really given me purpose. And just along that with your, you know, mentorship, which I appreciate in our 15 years of history together, it's kind of led us to this point where we put together Storh. And you know, it's all around applying technology that exists today to acquire and hold resources, natural resources in particular, and of course companies around that support the space. So Storh is an amalgamation of a handful of assets that we know we can affect and increase the efficiency and add value to, which gives us market resilience, right? Because we're playing in the mineral space, we're playing in the traditional energy space, we're playing in renewables and plastics, which is, I think, going to have a huge future. But more importantly, these aren't theoretical technologies, right? These are assets that we can execute on today. If somebody says, hey, go put some money out into a wind farm in central Arkansas, and I go, that sounds nice, but when do I get my money back? Is that 10, 12, 15 years from now? I need to turn my money over quicker. And so that's why we focus on assets that we can execute on that are profitable from day one. It's why we acquired Raccoon Bend, which we'll talk about in a minute. But we've done that under one single umbrella. So when you buy a Storh token, which is essentially an equity token, it's an ownership in a company, it's under one vehicle that allows us the agility to be able to acquire these assets. And as I mentioned, it's asset backed, right? So this isn't 2016, the ICO space where, you know, people come out with a really smart looking white paper, you put your Ethereum in, and now you're detached from the actual investment. They've got your dollars, you've got a token, but there's no connectivity between the two. And we've done that through our private placement memorandum and given you true equity in a company and in these real assets. So a lot of people ask, well, if it's such a traditional investment, why are you tokenizing it? Well, one of the main reasons is for liquidity. We still have all the traditional liquidity options we can list on a public exchange. You know, I ran public company for 10 years on the Australian Stock Exchange. So we have all those capabilities today, but we also have all the crypto liquidity options too. We can tokenize the assets. We can tokenize reserves and minerals in the ground. We can also list on multiple crypto exchanges too to give us liquidity, which is incredible opportunity, I think. And we're still in our infancy, right? So we still have a long way to go, but the opportunities are endless. And of course, here you are, you're talking to the CEO, I'm out here, my face is here, you get to see our board, you can call us, you can talk to us, and we're experienced in our particular sector. So I'm traditional energy, upstream side, Philip Judge on the mineral side with Robin Schlatter. We've got technology. We've got our midstream guy, Randall Eddington, who's my business partner. So we're all here and very visible, which is not like most of the companies out there promoting to you today. So how do we approach our projects? We talked about diversity and agility with under one platform. We've started out, of course, like any good project, with a foundation, right? So how do you secure a good foundation? You pick an asset that may not be as high growth, but has long life stability. So that's why we've acquired this field out in Texas, because again, we've got reserve reports showing reserves economic out 30 years, which is just absolutely fantastic. And we'll have our initial investment back in a few years. So I can't hear you. Lost you.
No, keep going, Ryan. Sorry.
Oh, sorry. I thought you were asking a question. And so then we migrate, to obviously our core assets, which we'll talk about, which are extremely exciting. And then of course, high growth. So Texas, what is it? We acquired at the end of July, 1st of August, a field that's producing 800 barrels a day. I've been eyeballing this project with my buddy Pete, who's a geologist, has been involved in it for 12 years. I've been looking at it for 6, tried to acquire it when we had our public company, but couldn't do it. But we've just closed on that. We're super excited because now we're in development phase. So as I mentioned, we only buy assets that we can increase the value of. So how do we do that? We have to put more investment in it. So what we've done is we've taken the cash flow, we're taking cash flow and of course some new capital, and we're putting it back into the field. We're accelerating its growth. We just drilled 2 wells, had a great result. We're about to drill a 3rd and 4th well here in October. And it's going for a much bigger target. So we're super excited about that. And then of course, we have about 8 different workovers and recompletions that we're doing in the field. So we'll be producing well over 800 barrels a day here in the very near future. So we're putting all this production online now. Again, it's 90 wells, 5,600 acres. It's a huge project and it's just a world-class oil field. So if you want, if you want to buy into a world-class oil field, buy Storh tokens just on the basis of this.
Yeah, just on the last slide, on the Raccoon Bend, it's really an awesome project. I love it so much as an investor. Number one, risk management when it comes to investing is absolutely key, Ryan, as we often speak about. And this is owned by over 80% of it's owned by industry experts, geologists, engineers, etc. The Catholic Retirement Fund own a small portion, of course. Storh owns a portion. So we have ownership of an awesome asset. Now, I want to just recap here a bit for people who have new people on the call here, why it was so important to buy this particular asset, not just from the risk management, because it generates, we settled on this on the 1st of August. It's generating income. And it sounds easily, just in numbers, going from 800 to 1,000 barrels, but 200 barrels a day, at $55 a barrel, is a bit over that now. That's an extra $4 million in revenue per year, roughly, in those numbers. So you quantify that out over the life of the well, and we're adding, the whole point is we want to add value to the token price. This is really the absolute key focus right now. Over the next 12 months, we have to build this token price 5 to 10x in one sense. Because when we list it on an exchange, we want to have lots of buyers there wanting to own it, of course, because I know there's going to be lots of sellers, lots of people on this call, including myself, may liquidate part of it to get some of my working capital back and leave the rest there to generate a long-term sustainable return. So this is really our key focus right now. So you've done 1 well, which I know that you said it's 60 foot of pay, which I don't really understand what it all means, but it sounds nice. but it's increased in the value. We've already increased. We bought Raccoon Bend at a price. We've already increased that price because we've already tapped into more reserves, and that's the plan over the next 12 months, Ryan.
That's it. Yeah. So our plan was to drill 4 wells by the end of the year. And of course, we're going to recomplete probably, 6 to 8 and put back online a handful more than that. So we'll have quite a bit of production to add before the end of the year. And of course, the one that we're going to drill here, beginning of October, it's a pretty substantial objective that we're after. So, 50, 60 feet of pay, and some of these sands that are, 5, 10 acres in size are pretty substantial, and will produce fantastic cash flow and great returns on the investment for drilling the well. But when you're after something that could add 500,000 to 1 million barrels of reserves, it's huge. So we're certainly after that, and that's our plan. And of course, I want to mention just real quick, so I don't drag this out, is that we are hedged. So from a pricing perspective, risk management perspective, we are hedged with a low of 56. So if it drops below 56, British Petroleum cuts us a check. And of course, if it goes any higher than that, we receive, we do get the upside minus $4. So we're not locked in at 56. And then if it goes to, 80, we don't get that. Of course we do, but there's just a small discount to that. We have to pay BP. That's a $4 collar.
Well, yeah, just recapping, because some people may not understand the term hedge, etc. Primarily, it's an insurance policy. What you've really purchased through British Petroleum, BP, you've purchased an insurance policy on the sales price of oil. It's a commodity in gas in one sense. So if the oil price drops below 56, British Petroleum are still going to pay you 56. If it runs up to $100 a barrel, it's a $4 collar. It means you're going to pay $4 out of the $100. You'll get 90. Storh will get 96, and you're paying a $4 premium back to British Petroleum for that insurance policy, which just sounds like it's an awesome protection for our long-term asset.
Sure, yeah. I mean, the only downside is if it goes to $58, we don't get $58, we get 56. So that's the small insurance price that we pay, right? So that's the only quid pro quo. But we didn't want to limit our upside, because who knows, with all the volatility happening around the world, we certainly wanted to be protected there. And of course, we want to protect our downside more importantly, which was why we locked in at $58, but at the time that was the $56 floor is what it locked us in at. But one of the biggest areas that, I don't need to tell anybody on this call, everyone's familiar with the plastics crisis around the world. But what are people, doing about it? Because really the issue with single-use plastics and logistics in terms of how we consume, consumables, how we consume water and all these other packaging and food products and various things. So that's not going to get solved anytime soon. And so we've got a huge problem that we need to address. What do we do? The worst thing I think that we can do is obviously leave this stuff in our oceans. So it needs to be cleaned. And the second thing is our municipalities that collect our garbage and have us separate it are putting it in landfills for the most part. Some are sending it to recycling, but we really want to start kind of a major shift towards cleaning this plastic and converting it back into fuel. Because remember, this stuff originally came from hydrocarbons. It came from oil. It came out of the ground. All we're doing is putting that oil back into the market. So in a sense, it's very green from a process perspective. And again, there's no emissions. So it's green from that perspective as well, and highly profitable. I think I should mention that, because these particular sites that we're looking to build out will pay out in sometimes less than 2 years, but somewhere between 2 and 3 years is what our payout is. That's a significant return. And again, it doesn't stop there. These facilities will operate for 20-something, 30-something years if maintained properly. So we're evaluating technologies now. We're actually looking at a partnership with a couple of companies that have the technology, and we're being very selective in that process. And of course, we're looking for sites, but plastics to fuels would be a big push for us. And of course, we haven't talked much about this, but we're heavily evaluating 2 projects in Ecuador. I was just there about a month and some change ago, and probably been almost 2 months now maybe, but looked at some fantastic projects in Ecuador around mineral reclamation and land recovery. So what does all that mean, right? So if you think back, many decades, mineral companies have gone to various parts of the world, Peru, Australia, Ecuador, you name the country, the United States, and have absolutely decimated most of these areas and left behind huge problems, right? Where these chemicals leach into the water tables, sicken the children in the particular areas where, you know, these people live around these sites. And it's just absolutely horrific. The technology exists today. It's a lot more efficient than it used to be. So we can go back to these tailings and heap leach piles and basically reprocess them. We're not going in and we're not mining, we're not strip mining, we're not tearing, you know, holes in the side of mountains to dig out ore. We're simply going back where these problems exist, and we're applying new technology that is a lot more efficient, and we can process all of these cuttings and tailings to recover gold, silver, nickel, lead, you name it, and then put the land back in the position that it was originally in and stop the devastation that's happened around the world. So this is a huge initiative for us, and of course there are a lot of social projects that wrap around that we're working on, and you know, how do we give back to the community? So obviously doing good for the environment's a heck of a lot, you know, better when it's financially rewarding, as we say at the end of our little corporate video. But financially rewarding is this: we're going to list this token at the end of 2020 or early 2021. It all depends on market timing. But our goal here is to 5 to 10x the token price, put very simply. So until that point in time, we are going to compound the distributions back into assets to really ramp this up, to really grow it, because this has a lot more value than the cash flow for the next 12 months back to token holders. And then at that point in time, you'll have the choice. Do you monetize all, part, some, none of your Storh tokens, or do you just hang on for the ride and receive the distributions from that point forward? So that's our plan. We're currently at 40 cents euro. That's the wholesale price, of course. That will move here, I think, within the next 2 weeks. We still have to nail that down, but that is our plan. That is going to move up, not down, of course, because of the increased value of what we've been able to do over the last couple of months. So with that being said, thank you.
Yeah, great update, Ryan. Okay, let's just spend a little bit of time on this.
Sure.
Because many people on this particular call, lots of people are asking about when distributions or dividends are going to come out. As Ryan said, right now, that's going to be a 12-month target. Now, to me as an investor, and I have money invested in Storh, as Ryan does, and all the people on this particular call, our aim is when we deploy it on an exchange, we want to get, well, here, if you're talking the wholesale price, I want to explain this in a moment as well, so we don't confuse people. We want a 10x on our money. Now, just saying numbers 5x and 10x, you can come off the tip of the tongue very easily. Now, what's really important for us to understand with Storh, we own real assets. So the token price increase is going to be based on the increasing acquisition of assets, the increasing added value to the assets, as Ryan's doing right now with the team at Raccoon Bend. And this is going to take time. I would rather be in a position 12 months time. Well, it's actually going to be a little bit longer than 12 months. So we're talking Q4 2020. We're looking at listing where we're going to have maybe 5 to 10x return on our money versus taking part of the proceeds now from Raccoon Bend and paying it out to people, which means we can't do the expansion because the money's coming out of the revenues coming out of Raccoon Bend. We're going to be paying out a very small amount to people all around the world versus focusing on the asset acquisition. I myself would rather be in a position in 12 to 18 months right now to say, okay, it's listed on the exchange. I've got 5 to 10x return on my money. I have an option right now. I can get out. I can at least get my capital out. I can relieve the balances there. And then, of course, all revenues, because we would have finished the expansion, all revenues will be then paid out in distributions to members. So this is where our focus is right now, because we get lots of emails and lots of questions coming in when we're going to get distributions. That's not our key right now. The key focus is, as an asset manager, and that's what Ryan's doing, is to add value to the actual assets. So when we do list, number one, there's going to be plenty of buyers there. And then why will they want to buy in at 4 or 5, 10 euros, whatever the price is going to be? They want to buy in because we've expanded, we've added value to these particular assets. These assets are adding, have significant revenues, and people are going to get a good return on their investment. That's why they want to buy in. that you and me, who got in early, of course, we're going to earn a multiple on our token value as well. But this takes time. This is not a quick rich program. Now, Ryan mentioned earlier also that we're very unique in our world, in our space, I should say, because historically, ICOs and token issuers did a fantastic job of separating the token holder from the underlying ownership of the asset or ownership of the utility. Now, this is really important to understand. Through the private placement memorandum, you actually own equity in the US company. You can leave it to the next generation as well, which is really important. You own something that's real there. Whereas when you just buy a token off any particular crypto exchange, I would say over 95% of them, you're just owning a token. You don't have ownership on that utility or ownership over that actual particular asset. So you're owning real assets. When you buy a store, you're owning real assets. You're going to be generating long-term income. But our core focus right now, I want to be very clear about this, we must build asset value. And 12 months is not a long time to wait to get our first pyrolysis plant up and going, to get much of the extension on Raccoon Bend completed. We're going to have a balance sheet which is increased in value, which is going to carry over to the valuation of Storh. That's where our main focus is now. That's really important, and that's what I want. And when the management team, we met last week, I'm in New York now, but when we met last week, this is complete focus. This is the right way to manage this particular asset. All of us want to get a quick return from this, but to do it right, to maximize it, have it in a sustainable model, we must focus on building the asset value. So these expansions of Raccoon Bend are really important. I know we only settled on the 1st of August. You've already finished one, which is awesome. And we've got many more to do between now and the end of this year, of course. And then, of course, we want to also move into, I know you've done quite a few tests on the plastics as well, and site analysis for the midstream. I know Randall, who's very excited, he's more like a chemist in one sense, is very excited about polystream plastics to fuel. That's going to generate significant revenues for everyone, of course, and of course that will also keep the store price nice and strong. So I just wanted to touch on that. I think it's very important that we're transparent and very clear about that. But the next 12 months, it's all about asset acquisition and building value for our store holding value.
Yep, that's a great point. The only I was just going to sort of add to that is, think about if you're a token holder today, you own tokens, and so you thus own all the assets under the store umbrella. All that revenue from Raccoon Bend is your revenue. We're just simply compounding it for you into building more value into the company. Now, I'm a competitor, just, like most of us, I love to compete. And so it's all about competition in my books. I'd much rather take my revenue and compound it versus the company go and bring more investors in to replace that capital. So, and then share the future revenue with those people later. So that's essentially the decision that we have to make as asset managers. And so for myself, for you, Bill, I know we've talked about this extensively, and most of the token holders, there's probably a couple that are, hey, I'd love to see some distribution. Are you guys real? Fine, we can show you that we're real. That's no issue. But the big thing is to understand the value of compounding and not over diluting token holders with new capital. So those are the two main points. So I know you did a great job there. Thank you.
Yeah, thanks, Ryan. The other thing I just wanted to touch on briefly is people still get confused about the store price. We have a package price and we have the store price. Now, let me just touch on that without trying to confuse people too much. When you buy a package, when you buy store tokens on Utopianglobal, you're buying it in euro. Okay, I've got Swiss francs, but let's just use this as an example. Imagine this is euro, even though it's a Swiss franc, okay? Depending on the package you buy, if you can imagine this particular euro, percentage of it's going to go in commissions. A very tiny percentage is going to go to Utopianglobal, and a percentage is going to go to Storh. That's the allocation on the small package. Now, on the big packages, you have up to only 92%. 92% will be allocated to Storh, and a very small amount will be allocated to commissions and a very small amount to Utopianglobal. So the larger the package, the greater the allocation to Storh, which means there's more funds flowing to Storh, which means we can acquire more assets. When people are calculating their returns, they're talking about, quite often people looking at the euro price or package price, it does get confusing. We don't pay a return on commissions. How can we pay a return on commissions? We can't do that, can we? It's logical. So we've raised, it gets quite complex here. We've raised capital at 10 cents, we've raised capital at 20 cents, we're raising capital at 40 cents now. I'm talking wholesale price, which is the equivalent of euro, of course. So the people coming in now, there's a lot of upside. People are going to do very well, even buying in now. They're going to do more than 5x their money coming into Utopianglobal now. But people got in very early because last year we didn't even have a website with Storh. The white paper only came out in January. This is why when people came in, this is why you got a discount price. There was increased risk because we didn't own anything. But as we of course now start acquiring more assets and adding value to them, we're actually increasing the asset value, which is going to benefit all of you. So I just really wanted to touch on that, but also explaining that there's a package price, which includes commissions and a portion to Utopianglobal, and there's an allocation to your Storh. We don't pay out, when we speak about returns, we can't pay out returns on commissions that have already been paid out to affiliates. It doesn't happen. Okay, but of course the high-end investors, people who are coming in for 9,000, 100,000 euro, etc., most of their money, as I said, up to 92% of that's going to be allocated to Storh. But that benefits all of us, because a person coming in with a €500,000 package earns the same Storh as someone that's coming in with a small package. So this is really important, and the bigger packages be coming in, of course, it's more funds allocated to Storh, which means increases the asset acquisition and valuation as well. So I wanted to touch on that so people aren't confused. Back over to you, Claudia.
Thank you, Bill. And when you said the person who comes in and buys a €500,000, maybe just to also clarify that, and the person versus buying a €99 owns the same Storh, meaning no, they don't own the same amount of Storh. Obviously, the €500,000 investor owns way more Storh than the €99 investor, but it's the same asset which they're owning. That's what you meant, correct?
Yes, we only have one Storh token. So, you know, whether I buy 50 euros worth of Storh, whether I buy 100,000 euros worth of Storh, I'm owning Storh token. I own the same assets, but of course, I'll be buying them at a different pricing of that sense. But the reason we do this too, I mean, we've had people, high-end income earners that ask us, why do you do that? Why did Storh do this with Utopianglobal? Well, the simple reason is we're living in a world today where people need to have multiple streams of income. We're here for all people, regardless of who you are, where you are, what your financial standing, education is. Here you have the opportunity of earning real assets with a real company, backed by a real experienced team, and you also have the opportunity to generate another source of income by referring and marketing our products, which means you can earn your commissions that's sent to your e-wallet. You can buy some gold and silver, or you can actually compound your Storh, turn those commissions back into Storh for the long term when we get our 5 to 10x on when we liquidate, when we go onto the market, I should exchange. So the more tokens you get over the long term, it's going to be the better for you.
And of course, the higher of the package you obviously enter, that means the more tokens you're actually going to get. So which is really great. But let me continue, of course, and really wrap this up here, because as you see, with Utopianglobal and the benefit really when you become actually a business owner, what Bill explained in the very beginning, we all have to have a different income, a side income, most of us, and we need to have other sources of income streams. So if you just depend on your job, or you have maybe a small business, that may not be just enough. So we do all need other income streams, and so of course this is what Utopianglobal does. Utopianglobal has an affiliate membership system where you can market our products and services and get access to Swiss LBMA certified gold or silver wholesale pricing. You get access to Swiss secure LBMA accredited precious metals vaulting. You get fully insured shipments delivered to your door if you can deliver to the country. You have a quick and easy liquidation and zero fees. You get your premium wealth education and coaching program as access to webinar marketing materials, lots of them coming out, and obviously your own business platform, meaning you can really literally build your business on your laptop, on your computer, and traveling the world. And it's made very, very easy for you. So there is multiple ways that you can earn. One obviously is once you invest in Utopian Global ecosystem products and services, and you commit actually to the €50 monthly wealth plan if you're an affiliate, and you can earn then from the capital growth of the Storh equity token. You can eventually earn quarterly rewards from the profits generated by the assets owned by Storh. And what Ryan explained to you before is that the returns right now from, of course, the asset that we acquired is actually at the moment being compounded, being reinvested, so that eventually, of course, the Storh token price is going to go up based, of course, on those reinvestment, which is great. So you're actually earning already, but it is being compounded for you. So, and the different ways to earn when you share the message and service with others, obviously you get one-time cash bonuses on the sale of the Utopian Global Storh membership packages. You earn one-time cash bonus on the sale of all of precious metals, gold or silver. You can qualify for incentives, including luxury travels, as we do have, and earn residual income, commissions and bonus through the unilevel commission plan and for your customers and, of course, your affiliate team. So it's pretty simple to get started. You can become a customer, as you see, with Storh for €50, 25 just with precious metals already starting. What do? You complete your KYC and your PPM, your legal documents. Before that, you cannot do nothing with us. And then you can start purchasing. You become an affiliate member, at €50 monthly. That's for the maintaining of your basically business. And you're going to get Storh tokens, or if you're in the United States, you get silver with it each and every month, and you have your platform and all what really that platform entails. At the moment, the packages to join, and that's going to change very, very soon. So I'm just letting you know something new here. Yes, at the moment, you can start as an affiliate from as little as €99, but that's going to get taken away in the next few weeks, probably. Why? Well, because it's €99 sounds really nice, €170 sounds very nice, but and it's great for some countries where you basically have lower, but because we're really talking about real assets. I mean, assets which they're solid, and they're there for the long term. So if you cannot really buy with a €99, you cannot put a €99 on, maybe you should look at for doing something else, or maybe generate a different way of income. And so the €99 was really nice for the first half year, getting in, getting started, tipping a little bit of a toe, but we are now actually having real assets. So we are owning real assets, which are usually just for the very selective crowd. They're not for the ordinary people, but we have it. And so we are the ordinary folks. I myself consider myself ordinary, and we have extraordinary assets for all of us. And so, basically after half year now in, we have reviewed our packages and are reviewing our packages, and therefore very soon the 99 and 170 will be taken away, and we will start from as little as €390 to get in, and then of course the 790, 1,500, 3,500 up to €1 million as an entry, obviously for the high-end investors. And as you see, you get all this platform once you become an affiliate. And then, of course, we have the different payment systems where you can earn the different ways commissions from referring. As you see here under those different packages, obviously, as higher your entry, as more Storh tokens you actually currently get. So the fast start referral commissions, this is when every time you introduce a new person, every time, and that person buys, be it gold or silver, or be it Storh token, albeit a membership package. Just in this case, as you see here, you make a commission, yes? And so in this case, as you see here, let's say you were to refer the 390 euro package, you're going to get a 146 euro 76 straight away paid to you in commissions for referring that person. And then of course you have the higher packages here, the 9K to 1 million, which is really high-end investor, where it's the same deal. You're going to get those commissions one time, of course, every time you do refer one of those packages. And then we have all the other commissions, which are repetitive, meaning which are ongoing commissions as people buy their 50 euro memberships. Important notice, of course, there is no guarantee that you will earn any money using the techniques and ideas displayed. We always have to make the disclaimer: the materials are not to be interpreted as a promise, as a guarantee of earnings, or perpetuating this is a financial advice. We are not financial advisors, definitely not. Yes, we own assets now, real assets, but again, so as per terms and conditions, of course, of Storh, equity token is not licensed for distribution in the United States. And I know we have a lot of questions, and we are currently, all the three of us are in the United States, which is an amazing country. But unfortunately, at the moment, still Storh cannot be sold in the United States. So the entry into Utopianglobal is covered by a 14-day money-back guarantee. So if you decide to become an affiliate, and you have this guarantee of 14 days money back if you decide otherwise, which is also really, really great. And you know, many companies don't do that yet. We do. Ready to join? Well, pretty simple. Request the Storh white paper from the person you recommended you to this presentation. Ask for more details on the compensation plan, or contact the person who invited you to this presentation. And of course, closing out here. Some of you know, some of you don't. We are on tour again. So basically in less than 2 weeks coming up, starting our Africa tour. So we're going to go to Nairobi, Kenya, and we do have an office in Nairobi, Kenya. So most of the meetings will be held in the office in Nairobi, Kenya. We are there the 13th, 14th are presentations, and we're still there till the 17th, I believe, in Kenya. So we do also then some individual meetings over there. 18th and 19th, we're going to be in Uganda. Those are big hosted events by Pastor Eddie, and of course we are coming. And on the 21st, there's an event in Durban in South Africa, and on the 24th is an event in Johannesburg, also in South Africa. So you see, it's 3 countries, different cities. It's 6 different cities. Yes, it's Nairobi, Kampala, Mukono, Durban, and Johannesburg. So it's 1, 2, 3, 5 cities. Yes, so looking forward to have you all there. So we have some questions still coming up, Bill, and Ryan, if you're still on the call, I'm not sure. So one of the questions, Ryan, was on the pyrolysis plant. So as we're doing good, meaning turning that plastic into fuel, and of course you then mix it, blend it, and resell it to the market. So there's some questions: is does it then harm other things? So are there other things which, let's say, we do good in one side, but on the other hand side, we are creating another issue? That was one of the questions which is coming. I don't know if you can answer that, or maybe this is a question more for Randall Addington.
No, I mean, look, it's a valid question. So one of the issues is, obviously, we're creating a fuel, an oil that's refined down to various products. If we're selling it as pyrolysis oil, we're blending it, it goes to a refinery, and the refinery creates all the products that we use and enjoy today. I mean, thousands and thousands of products are made from oil, which we have to sustain our society. So the question is, philosophically, do you agree with using oil to create these thousands of products which have given us our economy, our technology, our way of life, essentially? The second thing is, and that's a debate you can have, but the second thing is, pyrolysis oil or diesel is actually cleaner after having been run through the plastics to fuel process. So when you actually take the diesel and you put it in a vehicle and you run it compared to other diesels, this biodiesel actually runs a lot cleaner, like 30 to 40% cleaner. So that's good. The more important, sort of bigger macroeconomic issue is that we're putting oil back into the market. So if you think about what we're doing, we're putting supply back in the market, which puts negative pressure on the oil industry, because that's oil that they don't have to then produce to make the products and goods and services. So that's what this is. Well, all we're doing is take we're already using what's already been taken out of the ground. That's the real message. Could you take the plastic and can you recycle it and make other plastic products out of it? Sure. Are those going to end up back in the ocean and the landfills and all those things? So yeah, it's not 100% green because it is producing oil, but that's where it came from. So I guess you could either have an issue with the plastic, or you could have an issue with the oil companies and just in general about oil and what our uses are. But that's just sort of the take. And I think no matter how you slice it, it's not the solution. The solution is to get rid of all plastics or make sure that they don't end up in our landfills and oceans. But if we can't do that, we have to be able to do something with this plastic, which makes sense. And this makes really good sense, because the alternative is putting it in a landfill or letting it have it decay in our oceans and end up in the polar ice caps, which they've already found it, as fish eat, all these microplastics. I mean, it's just a huge problem. So I think what we're doing is good. And so this is our solution. Maybe somebody else has a better solution, but this is our way of affecting change with our knowledge.
We should talk about Storh price too, Ryan. We had a board discussion last week about the Storh price. I mean, you just completed the first well in, of course, Raccoon Bend, which has 60 foot of pay. I think you said, 10 acres or something, which is quite significant, which will quantify out over the life of the well in significant funds. So you've already added value to that particular asset. So
yeah, it's starting production. That well's already in production, by the way. It's already making over 40 something barrels a day.
Wow,
So,
okay.
Yeah.
That's just the beginning. It'll increase over time. So, of course, we spoke about increasing the Storh price over the next coming weeks. Based on that, which you're still yet to quantify the numbers, but we believe sometime in September, the Storh price will increase, and we're sort of estimating it to be
20 to 25%.
Okay, gotcha. Just to let people know, that is the case. Great. So we'll come out with a formal announcement from Storh, from Ryan. Claudia, any other questions?
No, basically that cleared up a lot. Obviously, we had an amazing time here in the US, so we're looking forward to go back and be back on tour. Lots of changes coming in the very near future. So just again, if you are currently thinking to get involved and tipping your toe, well, you still can. But I believe in under 2 weeks, the 2 first packages will be gone. So we will not be able to join anymore with 99 or 170. It will be then from 390 euros onwards. And of course, the announcements, as you said, with the token price increase will be out very soon. So if you still want to get in at the moment, so you better get in now, because really any day we can send out this announcement when Ryan, you're completing the drilling of the next wells there. And that's great news. That means we are advancing, we are moving ahead, the price is moving ahead, and we are moving towards our €4 target, which is of course and towards our 5 or even 10x of the price, which we all want to achieve, which is really amazing. So thank you guys.
And I want to congratulate Ryan and the team. I mean, if you consider what they've achieved this year, the white paper came out in January this year. We thought we were going to acquire Raccoon Bend much earlier, but it's quite a complex transaction. But you settled on it the 1st of August, which is 28 days ago, and you're already receiving revenues from the well that you've actually drilled in the last, I think it's the last 10 days. It's pretty awesome. So things are going to speed up now, but again, the complete focus right now is to reinvest your money. I'm talking whoever's a store owner, it's your revenues. That's going to be reinvested to compound the value of the Storh token, because that is the key the key objective right now for the next 12 months. We've got to get to this high valuation. So when we list, we're all very happy with the outcome.
Fantastic. Well, let's do it. Thank you guys for joining, and we are on our flight back very soon. So here from over to Europe, and yeah, looking forward to meet all those people in Africa. Very, very exciting to bring this opportunity to you. So if you have people in Africa, well, you know the dates, they are there. Send them there to meet us, to learn about the opportunity, you know, and to help probably for the first time own real assets for most of you. So amazing times ahead, very exciting, and thank you guys, and looking to the next webinar, and send people so that we can, of course, grow much faster to our end goal where we are heading towards. Thank you, Ryan. Thank you, Bill.
Thank you. See you soon.
Thank you.